Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Got a lot of news today. We have, of course, our quad witch. Today we have that big S&P rebalance happening at the close, so that will probably cause some volatility at the very least at the close. But we have some individual news as well. TXN had a buyback. We have Wells Fargo layoffs. We have several M&A deals happening yesterday and this morning. Some earnings to discuss. Some very interesting ratings. NBEV catching a downgrade this morning. We're going to talk about that. JP Morgan downgraded like the entire Homebuilder sector. So a lot to discuss. And we have a guest as well today at 8:35. We'll be joined by Graham Day. He's the Vice President of Product Development and Research at Innovator ETFs. He'll join us at 8:35. Joel, what is the word of the overnight session?
Quiet overnight session. S&Ps are down two ticks here at 39 even. We made an all-time high in the pre-market session at 29.4550. That's a target on the upside. Your pre-market low is 37.50. Keep an eye on that. Not seeing much support until your daily pivot of 29.31 and a quarter. Really important to take out that pre-market high though, 45.5. You have Bitcoin trading up $305. This is a SIBO contract, is 67.10. Just a trading range in this. Ours just must be having a blast. Crude up 54 cents. This would be your November crude. Trading just off the highs of the session, 70.97. Gold still in that 1,200 to 1,220 trading range, right in the middle, down $1.90 at 1209.40. Silver up a dime at 14.41. Let's bring in Dennis. Dennis, are you feeling any better today?
Maybe a bit better, but this has been a wicked little virus here. So I was trying to sleep, but I got two kids obviously too, so sleep is difficult there. My wife tries to do as much as she can, but both kids had rough nights too. My daughter is still sick with this flu. My boy is almost over it, but when you got 3 out of the 4 people in the house sick, it makes for tough times to get some rest. So fighting through it here again, guys. So bear with me. My voice sounds a little bit better, not quite as nasally, not quite as congested, but still very, very tired. So if my trains of thought get lost here today, please forgive me.
So does this really put a crimp in your trading, right?
It does, because, you just feel a little under the weather, and it's all about speed. I mean, you're trading, and, for me, I trade a lot of the news. You got to be quick. And, if you're not thinking straight, or if you're not reading a headline correctly, you can make a rash decision that you might regret. So actually, it's funny. You can probably go into one of these mergers here, and I'll tell you about a trade that I did.
Okay, yeah, let's talk about that. Spencer, give us the details on the merger.
Well, there's a couple. Let's talk about, I guess, the Medtronic one.
Let's do the Medtronic one because it's the two public companies.
Medtronic to acquire Mazor Robotics for $58.50 per ADS in cash.
Yeah, so $58.50 is the price. I saw this headline break last night, and I quickly, and because the headline breaks, and it says MDT to buy Mazor Robotics. The price was there, but I didn't really notice. I just saw that, so I quickly go and I grabbed the $53.50 offer, I get a chunk of $53.50, and the stock was $52.75. But then I look back at the headline; it says taken over for $29.50. I throw up in my mouth a little bit there for a second, because I'm like, wait a second, what's going on? So I actually go click the article, and then you click it, and then it has the actual prices, because that was the price overseas. The ADR price was $58.50, but in the original headline, it was 29 and change. So that's probably why none of the algos jumped all over it, and I had a few seconds to respond. So I believe I was one of the first people to buy the stock. I would have turned around and bought more at 55 if I would have known the price, but I had to go click. So I basically bought what was at 53.50. The next price up was 55. There was like 2,500 shares. There was a lot of stock there too. But at this time, I was already kind of throwing up, because I was like, is this a take under? And then I had to click it. And by the time I came back from reading the actual press release to going and actually coming back to see the offer, the 55 was gone. So the reason it didn't go right away, usually when you have a takeover and it's a price in the headline, the algos are all over it. It would be like up immediately. The 53, 55 would have been gone. But because the original headline price showed the price overseas at 29.50, the algos didn't buy it. And that's what gave a human being like me a chance to actually buy something on the cheap. So I was quick, but I didn't read the headline quick enough to grab some 55 too. So obviously I made some money on the 53.50 shares that I bought, and I've already sold them because it's already kind of priced in here now for 57.90. This is time value of money here now. But sometimes those algos don't respond, and if it's not in the headline, you can see they're headline readers and not actual article readers sometimes.
Okay, not a huge premium, and kind of interesting takeout price because this stock had an all-time high of 76.55, and then you just had.
Sorry, I never gave the symbol on it. It's Mazor Robotics, which is MZebra-OR. So Michael, Zebra, Orca, Roger.
Okay. All right. Like I said, the stock came off its all-time high and looks like it was trying to rebound, and now you're getting the takeout. So, the company, figuring the best way to go is in a merger here, trading up 5.11 at 57.86. The ARBs are in here. People just want to get out, put their money somewhere else. $58 has been the high. Don't know if there'll be many regulatory concerns with this one.
I don't think so.
Nah.
Small deal.
Yep. And
it's a $1.6 billion deal for Medtronic, which you had asked me. Sorry, Joel, but you had asked me in pre-market about is Medtronic going to go down on this, and I said I think it's such a small deal. I don't even know if Medtronic's going to move much on it at all. Medtronic, we looked it up, Spencer. What's the market cap on MDT?
$131 billion.
And this is a $1.6 billion deal. So it's a drop in the bucket for them. So I don't think this can be a situation where you see Medtronic fall 5% because they overpaid a little bit. And it wasn't even a big premium. I mean, really, when you look at it, it's only a 10% premium, which is really not that great.
All right. I'm an owner, just a recent owner of Dexcom here, DXCM. The reason I mentioned that is they're both, do medical devices and treating diabetes. This is another lead.
The symbol on that one.
DXCM. Boy, oh boy. I just look at the chart on this and I'm like, well, I guess it's okay to buy it. I would have rather have bought it when it dropped 50 points or 25 points back in late 2017. But, medical device makers, robotics, up and coming AI, who knows how they're going to be treating, different diabetes and different diseases. So I don't know. George is a little surprised the premium wasn't higher here, but
I'm surprised too. It wasn't higher.
Is there anybody else?
Actually, when I bought the 53.50, and then I was looking at 55, and the 55s were gone. I could have bought 56 at that point in time, but I was like, well, it's 58.50. I could buy 56, but I don't know if there's, at that time, actually, it was 56.5 or something you could have bought. But I was like, it's not that high of a premium. You got a time value. You don't know when this merger is going to go through. I mean, they're saying it's in the first quarter of 2019, but you got to wait to get paid. So I didn't know it would go right back up to $58. There could be some concerns, but I don't think there is in this case. So it would have been a good buy in hindsight. But people weren't just screaming over and buying everything last night on this. The premium was disappointing, I'll tell you that.
And I don't know if there's going to be any other suitors for this, but we'll keep an eye on it. I doubt it. So let's take on it. Then there's another merger, Adobe. Just one quick thing on Medtronic. It is trading at an all-time high here. An all-time high yesterday at 97.76. All-time closing high 97.48. So keep an eye on that close. I mean, sometimes they like to hit the acquire. This is not that big of a deal, but keep an eye on those levels. And we also have another merger by Adobe, correct?
Yep, and this one they are buying a private company. They're buying Marketo for $4.75 billion.
So nothing to say about the private company because there's no chart to look at there. You can look at Adobe, and this is a stock. It reported. That was last week. When did it report?
Yeah. Wow. Good memory. It was last Thursday, and they beat on their numbers there.
So stock is trading up slightly on this deal here, but the overall market here too. Also remember, we do have quadruple witch here today, so you are going to see some significant volatility probably on the open and probably on the close here today. We also have that rebalance that we talked about there a couple days ago happening on the close as well. So you could see some action here at the close.
For Adobe here, 3 of your last 6 lows are right at the 263.50 area. So yesterday's low, 64.19. Then the lowest of those 3 lows I mentioned was 63.31. So really no trouble for Adobe on, and on the downside until you take out 263.
They want to talk NBEV. I want to talk it too. Been an unbelievable stock. This morning was trading up over $10. And what's the high, Joel? I didn't notice what the high was.
Yeah, I noticed the high. The high is 10.14.
10.14?
10.34.
10.34. So it got up to 10.34. It was looking like it was going to probably open over 10, but then right around 7.30, the old downgrade came in. Maxim with the downgrade from buy to neutral, Spencer?
Yep, buy to neutral. I wasn't even aware anyone really covered this stock. But apparently they do.
All right. And what did they say here? What did they do on the downgrade?
Just buy to neutral.
Okay. Not many comments on this one. I'm still in it a little bit. Just parceled out some yesterday and then saw the pop after. But I have no idea where to get rid of this stock. I did sell some other calls against it just to lock things in. So we'll just see what happens. I think if it gets back near that pre-market high, 1034, double digits, considering it was just a single digit stock. 282 was the close on Tuesday. So a tripler. I don't know. I'm not used to having stocks like this in my favor. So I'm sure I'll mess it up somehow, but I'd love to see it back at double digits.
All right,
Did we lose Dennis?
I think we lost Dennis, but we're getting back here. Let's go to Micron.
We got to have him on for Micron.
All right. I'll read the numbers. You can do the charts, and then we'll get back. But Micron reporting yesterday after the bell. This is another example of how you have to pay attention. Listen to the calls, because if you really care about the stock, because the numbers they gave in the release were good for Q4. Their EPS beat, their sales beat, $3.53 versus $3.34. So nearly a 20-cent beat on the Q4 EPS. Sales came in at 8.44 versus $8.25 billion. So good Q4 numbers for Micron. But on the conference call, they gave guidance. Q1 EPS guidance came in light. $2.88 was the low end of the range. $3.06 was the estimate. Sales guidance, $7.9 billion was the low end of the range. $8.44 was the estimate. So they missed on both of the Q1 guidance figures they gave on the conference call.
Stock is just absolutely hated. I mean, they want any excuse to sell this thing. It makes a ton of money. It doesn't matter. All this market cares about is the top line. It cares zero about the bottom line. Unless you guide down, which, the earnings are guide down a dime. I mean, next quarter, they're going to make $3.05. It's going to make $2.95 next quarter. What is the annual? What are they looking at on a fiscal year? Did they give that, Spencer? Like, what are they looking to make?
I don't think they gave that.
You just start adding it up, though. Like, it looks like it's easily $12, eh?
I've got fiscal year CapEx for you, but that's not what you're looking for. So
fiscal year, like EPS numbers here. I'll go take a look at my systems here too. Joel, give us a breakdown. I want to look.
Oh my gosh, this thing got a little bit out of control here. You had a pre-market high of 40 or after hours, 48.77, and then they turned on a dime. Sold it down to 42.45, but that's where you found the buyers here, and they were very patient for the remainder of the after hours session, just bringing in stock between 42.5 and 43. Got a little more aggressive here at this 4 a.m. open, so you have some underneath demand here. I don't know about the pre-market low of 42.45. Does that boom? Where does that come in? 42.30. That was your low on September 13th. I will just do a quick calculation here. You had a low of 40.68. You had a high. Let's call it a 7-point move, 3.5. You tack that on there at 3.5 to that is 44.25. So it's trading right at that 50% area of this small rally that you had. So See if you can hold in here, 44 and even, 44 and a quarter. But I think if you start to tail off quite a bit, you're going to find buyers here ahead of that pre-market low of 42.45. Low of the move, the prior low of the move, 40.68. That was your September 12th low. And Dennis, everyone, you sticking with this one here, or it's just the stock has been a battle, huh?
Oh yeah, I'm sticking with it. I mean, it's my long-term investment portfolio, so I'm not too concerned about it long-term. It's out of favor. I mean, value stock, they don't care about bottom line money. I mean, and it's cyclical. The earnings going to stay up here? Probably not. They're going to come in, but how far are they going to come in? I mean, this company's still making a lot of money. If I was this company, I'd do like a serious like special dividend or do something or do a Dutch auction, because it's ridiculous how out of favor it is. If they really want to get the stock price back up to where it needs to be, I'd do a Dutch auction, but and throw it out there and see who will sell it. But I tell you, I'm not selling my stock for $44. It could continue to go down. It's out of favor. I'm not buying more. I have a full position in it now. But I mean, I like companies that make money. This company makes money. Even if the cyclical earnings go down, it's still going to be making probably some money and some good money. So trailing PE is 3.9 on it right now. I just did the math. Forward PE is 4.2. So they do expect the earnings to come down a little bit here. But you're talking about a stock with a PE of 4. They don't have a dividend. I mean, they could initiate a dividend. They could do some stuff. The one thing I guess they're concerned about, if they are cyclical, maybe that dividend, they might not be able to pay it longer term if they initiate it too high. But I don't know. If I was them, I'd be doing something with that cash and saying, we believe in this company here. I just hope it doesn't get taken over or something for like $50, because that's what happened to me on Dell. I really believed in Dell back in the day, and I got taken over at a crappy price. And I want to see this stock eventually trade a lot higher than this. So I'm sticking with it long term. And in some cases, they get so cheap that somebody else will come and scoop them up because they make just a lot of money and scoop them up on the cheap. And you can end up losing money on that trade because they take you out, they take you out. So that's my biggest fear, is that somebody actually scoops them up. I'm not saying that's going to happen. I think that would be the worst case scenario here, because I think long term, I think the stock is just dirt cheap.
Michael Pellini, I don't know if he's joking around. He put Dutch oven, but yeah. Michael, do you not know what the term Dutch auction is? Because could you?
Joel, did you just say that on the show?
Oh no.
Moving on.
Moving on. Joel's talking about different things. We won't even discuss what that is. So.
All right. I just want to talk about AMD here.
Joel. Yeah, Hunter say go private. That'd be the worst case scenario right there. Not even the takeover. That they just say, we're taking this company private. Forget your share price. We're going to buy all the stock out of $50 or something. I don't want my stock on at $50. I don't want my stock on at 44. I'm sticking with it. But I could see some scenarios where I could end up losing on this. And when this company makes this kind of money, obviously I'm losing money right now, and it's in my long-term portfolio, so I'm not that concerned about it. But I could see some scenarios where they just like, screw it, we'll take the company private and save all this money for ourselves. Take me out of $50, I'm averaging at 52, I lose on it. So
it's not getting taken over, Dennis. It has a book value.
Private?
That's a book value of $17 right now. It's not going to take it.
Yeah, but technology companies don't have huge book values. It's not like they have assets and stuff. It's their cash flow.
Let's
You're
talk.
telling me this company that's making $12-13, next year doesn't think that, hey, they got a lot of cash right now. How much cash do they have?
Spencer,
they got to be building up some cash.
I'm going to look at here. Hold on 1 second.
I just want to talk real quickly about AMD here real quick. It's just a thorn in my side here. Oh my gosh, you keep getting these raised in the price targets. I just don't like that. The price action. I don't know. I must have went out too far on this one, because some of the longer dated puts I bought are just not responding to this. And I didn't think I paid up in the premium so much. I got another price target raised today. Unless this thing takes out 30-50 pretty soon, I think I'm going to throw in the towel here on the AMD. It's had some nice declines, but man, it's just consolidating here. And this is kind of what happened to me last time. It, consolidated in an area in an uptrend, and I finally thought it was going to bust to the downside. Not such the case. Your last two lows, 30.51 and 30.64. So unless it takes that out today, I think I'll throw in the towel on that
$6.8 billion is how much cash Micron has.
Because they did that huge buyback, so they're dumping it back in the buyback there, which I think is the worst case scenario, because they keep doing these buybacks. I mean, they don't give them a multiple anyways. So if they're always going to trade with a 3 or 4, give me that cash back. Give me a special dividend. Don't do these buybacks and waste my money. So anyways, I would rather they did a special dividend one time, pay me out some big cash. So you're talking about a $52 billion company there, so it's only $6 billion in cash, which isn't a ton. But I believe that didn't they just do like a $10 or $12 billion buyback? So that's what they were using the cash on, buying back stock.
Yeah, that's a new person in the chat here comes in and says, MU probably won't get taken over. They took out a loan to do the buyback, so that makes their debt higher, and whoever buys them will have to.
What are they doing with the cash then?
I don't know what they're doing.
They're making $3. They're making $4. They're making some money here. I got to do some more homework on this because I don't know what they're doing with all their cash. So they're making a lot of money right now. They should be doing some better stuff, but they shouldn't have to borrow to do that buyback. They're making a hell of a lot of money right now.
Okay.
So, okay, I'll do some more homework on it, but I'm sticking with it.
Okay. All right.
So,
other earnings.
Jump over to, well, we're pretty much done the earnings parade. There was one other one, UNFI, this morning, and it's getting a beat. United Natural Foods.
That was yesterday, yeah, after the bell. Q4 EPS there, 76 cents versus 85 cents. Sales 2.59 versus 2.61 billion. So a miss on the Q4 numbers. The guidance they gave for the fiscal year was in line for the EPS and in line for the sales.
Joel?
Bad news here. You hit a pre-market low in the 29 handle, 29.35. You're bouncing, but you're not bouncing a whole lot here. That eclipses the former low of the move. The former low of the move was back in August at 31.84. So that'd be a resistance if you go into a rally. What's up? This is a new, well, the all-time low for this stock. Well, maybe let's see if it's an all-time low. Let me go farther back. 29.75 was a low that you had in February of 2016. Also, you sniffed that level. Man, when's the last time you've been under 30 besides that? Boy, it's been a long time. 29.07. That was your July of 2010 low. So let's see if you take out the whole number at 30, finds the support here at 29. But not a good looking chart going into the event. Flushing out the low of the move. Going to be a tough one. If you're looking to buy this one, either longer term or something, let the dust settle, for a day or two, see if it can put in a double bottom or matching bottom, something to lean on.
All right, jump over here. It's 8:23 here. We do have option expiration, so the imbalances will be interesting in 7 minutes. But let's just go cover some of these other ratings changes here because there's a lot actually going on in ratings land. We talked NBEV briefly there. Let's go over to AT&T. It's getting a lift here this morning from UBS. Stock is getting upgraded to buy.
Yep, upgrade to buy and a price target raise from $33 to $38.
All right, so the big number is $34. We look like we're going to test it. I already shorted it once off this level successfully. I might try it again. If it takes it out, I will cover. So I'm going to lean. If I'm setting up a trade here for this morning, I'll probably be trying to sell up here somewhere. I have no position on it yet, other than in my investment portfolio. But as a trade, you have 350,000 shares at 34. That's what I see in the book, and it's not considering anything that's hidden. There's more size at 33.98. There's some size up at 34.10. So runs into all kinds of trouble in the 33.90s. So I think it's going to open into that. The question is, does it have the gas to take it out? I don't know if that's the case.
That's a big move.
I think I might actually play for the short side.
Big move. 44 cents in the pre-market trading. That's a big move for AT&T. It has moved on 172,000 shares. Pre-market high right at 33.95. Just, a few thousand shares traded up there. Today, maybe not. You take out that 34 because you're going to have people in the book from the closing price of 33.44 all the way up to 34. Maybe not today, the first time up, but getting a running start. 34 is the number. And boy, that stock got really beat up. I can't remember on its earnings. Oh, you're also filling a gap here. Up at 34.08. You gapped down, had a real bad day in June, went from 34.35 to 32.22, and now you're back up filling that gap. So a good resistance here in AT&T. We'll see how influential UBS is with this upgrade.
I'm a seller into it, so I'm paid this upgrade. As long as it stays below 34. Above 34, it gets a little bit more interesting. Under Armour catching upgrade. Who upgraded Under Armour?
Let me go to my list here. It was
Didn't write it down.
It was JP Morgan upgraded to neutral, raising their price target from 16 to 20.
Stock trading up. We got them up 1%. The pre-market UAA or UA, pick your poison. UAA is up 1.95%. So a little bit of a lift. Joel, technical
double
thoughts.
upgrade. Got the upgrade yesterday, and
Did it?
Yeah. Yep, it did.
Who
Or no,
upgraded
not an upgrade. They adjusted their EPS, right? They gave some guidance.
Yeah,
it was kind of favorable guidance.
It was like they raised like the lower end of the range, so like they narrowed it. So yeah, it was okay. It wasn't bad.
Yeah, and they caught it, and we talked about the open, and it ended up only opening like 21 cents higher, and then you only took 3 cents worth of heat, and it barreled through the 19 handle, 2012 high, trading it up 33 cents here at 20 up 33 at 2033, pre-market high 2059. There are a couple highs where I talked about this yesterday. There are 3 highs right at 2070 to 2021 even. I don't know if this has really got the gas. Maybe 21 today. I don't know. I just don't see it. But pre-market high 20.54. That's your first bogey to take out.
Also, Square getting their price target raised to 101, street high 101 at Evercore here this morning. Square is getting a bid here. Square has been interesting. It's actually been strong in the pre-markets, but actually weak during the regular session the last few days. So that trend continues here this morning with the Evercore price target raise. It is trading up 75 cents in the pre-market. Thoughts on Square? It's kind of in the middle. It's pulled back from the highs. It's kind of trying to break the major uptrend there. It's just against it, but you've got this little, almost like you definitely have where you got the bulls and the bears going to be battling here. I would say as long as it holds the 83.33 low from a couple of days ago, bulls still have this in control. If it takes that out, that 83.33, I think it opens up to under $80.
Yeah, it does. It just a wall is forming here.
A little bit.
At 92.5 to 93. There's a couple walls in here. And basically what you did is you had some people that really wanted to wiggle out at the 93, 92.5, 93 area. 3 days in a row, those were your highs. And then they brought it down a little bit, perhaps to 92 because 91, 95 was your high. I'll just say this is up 74 cents. It's opening in the yesterday's high. So if we can clear this, keep above this 87.32, there's a buck to your 2-day high at 88.56. But man, let's see if some of the sellers here that wanted to dump at 92 and 91 maybe bring it down to 88 or so. As I said, your 2-day high is 88.56.
What other ratings? We talked NBEV.
JP Morgan.
Just give you a quick update because it is still falling a little bit in the pre-market, 896. So it's off the pre-market highs, was still up 14% of the day. So I guess you got to like it. When you see a stock get downgraded, it's actually trading up 14%. It just shows how hot this stock is. I don't know if this is going to be enough to cool it off or not. I'm not making any calls up here. All I will say is I like to call longer term. I think when we look at this a couple of months from now, I think it's going to give a lot of this back, but it's hot right now. These things can stay hot for a while. So I guess you ride the trend until the trend breaks. But the trend is still higher because this thing seems to go up every day.
JP Morgan had a big note this morning. They're downgrading a lot of home builders. So I'll just run through that real quick. They're downgrading Pulte, PHM to underweight. They're downgrading MTH to neutral, downgrading MDC to underweight, downgrading CCS to neutral, Beazer Homes to neutral, WSO to underweight, Copart, CPRT to underweight. Just downgrades across the board. I don't even know if anyone, a couple got upgraded. LGI Homes got upgraded. What else got upgraded?
Upgrades and downgrades? Don't they know all the stocks go the same way in the sector?
Yeah, but so pretty much mostly downgrades for the home builders here from JP Morgan.
The imbalances are huge to the buy side here right now. They just came out. But that being said, we know how wild these things are on option expiration days. So just because you see them positive right now doesn't mean they're necessarily going to open up. I don't even want to give you the numbers. They're so big. I mean, JP Morgan, 600,000 to buy. Bank of America, 700,000 to buy. ExxonMobil, 1.3 million to buy. Again, institutional action is all over on it. It's like they'll be all over these stocks today. So we're going to see these imbalances fluctuate a lot. So just because we get the first indications here doesn't necessarily mean these are all going to open way higher. If it opened right now, these stocks would open way higher, but I think you're going to see some other institutions coming in to pair off these huge buy imbalances I see right now.
Just not paying much attention to the imbalances, as they could easily be offset by another institution. I just want for our traders here, trading the home builders, I didn't want to comment on the individual ones, but take a look at like $39.80 to $40 in the XHB. You had several lows in that area: 983, 984, 987. 993, 998, and you guys get the point here. So let's call it $40 here. If that ETF can hold 40, you have a little gap to fill and then some more downside. So keep an eye on that. These kind of formations Dennis and I really like to keep an eye on, so see if it can hold that support at 40. Dennis, we got some questions on CRSP. That has been mentioned on our show here. I can't remember.
That got downgraded today.
Ooh. Down to who downgraded it?
Raymond James.
No, actually, sorry. Initiated Raymond James with an underweight. So it's down 4.5% because of that. But the chat is buzzing about this GTXI. I'm not following the story. Obviously, this is something that is significant because the stock is down 91% here in the pre-markets. It closed at 23.29. It's trading for $1 right now. So maybe this is one of those one-trick ponies, and the trick obviously didn't work out. Do you know the story here, Spencer, GTXI? Because this is ugly.
Yep, the release came out at pretty much at 8 as the show started. They announced that top-line results from their Astra trial did not achieve statistical significance in its primary endpoint. It was halted at 7:58. It resumed. It's going to resume. Oh, it just did resume at 8:30. That's why.
It's $1.
Yeah.
Right now, it's $1.36. So this is the thing, and I will tell you, when you have only one, when you're buying all these smaller drug companies and they have one potential drug in the pipeline, when it works out, it can be great, but a lot of times they don't work out, and when they don't work out, you pretty much lose all your money. So when you're doing stuff like the same thing with our KRYS play, I know a lot of people are from the chat, I'm still in it here, but if they come out with disappointing results on that trial for that drug, the thing can lose like 80, 90% a day. It can do that. If they come out with good results, the thing can double or triple. So, I mean, these are lottery tickets. And I wouldn't put any more money in anything like a Crystal Biotech or GTXI and stocks like this more than lotto money. Because if you're putting a big chunk of your savings and saying this is going to be it, you got to know this is always a possibility with these things. This stock is down 93%. This is probably not coming back ever. So your money is gone, 94%. It's not like, oh, well, about the 39 will eventually get back to $23. These things don't typically do that. They typically leak themselves to zero. So when the trial fails. So anyways, stocks $1.50 here at the pre-market. Big win for anybody who was short the thing going in, obviously, but anybody who bought the thing is losing all their money.
All right, we got a guest coming up here. A new guest, Spencer. Who we got coming on?
We got Graham Day coming on here just a minute or two. He's the VP of Product Development and Research at Innovator ETFs. I guess we'll take a quick break. It is 8:34, so we'll take a quick break and we will grab Graham Day. We'll be right back in a moment. Welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by, as we promised a moment ago, Graham Day, Innovator ETFs. Graham, how's it going today?
I'm doing well. How are you guys?
We're getting through the day, man. It's Friday.
It's Friday.
Good.
That's right.
Good. Yeah, absolutely.
Friday before a Michigan football game, so it's got to be a good day. All right, Graham, you're Vice President of Product Development and Research at Innovator ETFs. You are also a CFA up there, designation with Dennis. Just a real quick, just a 30-second recap of your education or your background in the markets.
Yeah, you know what? I was fortunate to start my career at PowerShares ETF. So back in 2008, and the guys that I worked with at PowerShares, Bruce Vaughn and John Southard, they were the original founders there. And they kind of have put the band back together here at Innovator ETFs as they bought the company last May. And so we're looking to do what we did at PowerShares, and that's build unique products, things that haven't been done in the ETF structure before, and add value to clients.
All right. And you guys just rolled out a new product here a few days ago, and it's a breakout innovation IBD breakout ETF here, and doing it obviously with Investors Business Daily. Tell us how this came about and the structure of it.
Yeah, absolutely. So we have a great relationship with Investors Business Daily. IBD has long been known for putting out actionable stock lists. So ideas that individuals like you or I or a financial advisor can subscribe to their research and really invest according to their original founder, William O'Neill's fundamental and technical research. And what we did here with the breakout ETF is really unique. In the ETF space, there are a lot of momentum-based ETFs. And those are ETFs that are simply buying stocks based off of their the fact that they've already appreciated in price. So they're looking in buying stocks that have already appreciated. And a lot of times the criticism we hear with momentum-based investing is that you're already buying into stock that's appreciated. And so you may have already missed out on the biggest move of that stock. And what IBD has found, and their research goes back to the 50s with this, is that a stock that's approaching a price resistance level. So maybe it made a high a few weeks ago and it really hasn't gone anywhere since. It's kind of hit a price resistance level. Well, as it approaches that price resistance level, that's when this ETF will buy that stock because it has the potential to break out above that price resistance level. And what IBD's research has shown is that it's a great way to own a stock before it becomes a momentum stock, and really a way to differentiate an investor's portfolio.
So, Graham, this is actively managed then?
You know, it's a great question. It's actually rules-based, and that's what's one of the cool things about IBD is all of their research is 100% rules-based. It is something that, from our perspective, an ETF issuer's perspective, it's the mirroring of two great companies, and really the ETF wrapper does really well with IBD's research. Why? Because IBD's research has a lot of turnover. Our ETFs with IBD rebalance every single week.
Wow.
And a lot of people would say, well, gosh, isn't that going to create a lot of taxable events if I'm selling some winners that I've got some gains in? Aren't I going to get a big tax bill? And the benefit of the ETF structure is that it has the ability to mitigate taxes through something that's called the in-kind creation redemption mechanism. And I won't get into specifics on this call with you guys, but all you need to know is our other IBD ETF, FFTY, the IBD 50, kind of their flagship ETF, was up 37% in 2017 and had over 1,000% turnover and issued no capital gains distribution. And so the rules-based nature, the tax efficiency of the ETF structure really makes putting IBD's research in the ETF structure a great fit.
Any input on the parameters that IBD uses to determine the prior resistance level, or they just give you the information?
You know what? So a couple of things. They've identified a few chart patterns that they typically see of a breakout stock. And so Really, we just rely on their research to identify these breakout candidates. But it fits really well within the ETF structure.
Do you feel like, man, oh man, like, something like this might have been, more relevant, 6 months? I mean, here you are in an aging bull market, or do you feel that, the time, there's always the timing there there's always stocks that are breaking out? What do you think about the timing of the rollout of this ETF?
Yeah, that's a great question. So I think what's different about this ETF relative to, I'll refer back to the momentum ETFs, is that when an 08 situation happens, I mean, you're really not going to find a lot of stocks with any sort of price momentum. I mean, it's very difficult to find that. But there are always going to be pockets of stocks that are or have the opportunity to break out. So it tends to be more of a growth ETF. And so we're not saying that it's not going to go down when the market goes down. But I think the key difference, and this is really what differentiates a lot of ETFs, is that individuals and advisors use them for exposure. So they're looking to put on exposure in their portfolios. And at times they may say, you know what, I want a momentum exposure. And so there's, I think, about 40 ETFs out there that provide some sort of exposure to price momentum. But there really hasn't been anything for an advisor to say, you know what, I don't really like price momentum right now. I want to get something that's going to have maybe a little bit of different exposure. I'm not sure if there's going to be a lot of price momentum in the market, but I like how some of the areas of the market are setting up for a potential breakout. Well, now they've got an ETF that they can buy, and the ETF does the work for them.
Let me be the first to suggest a new ETF for you guys, and I give you the symbol. It's BDWN, and that's for breakdown. So when you get taking the opposite of stocks that are hovering over support level and they're looking to break down, then you could just have a basket of those stocks.
Yeah, you could definitely, then that's what's interesting and fun about the ETF vehicle is there's always new opportunities and innovation that's coming about in the ETF space. And at the end of the day, we are simply trying to provide exposure to unique areas of the market. And so, Joel, that is an idea that we could definitely look into in the ETF structure.
Saying that a little bit tongue in cheek here, but let's move on here. And we got a few minutes left here. Let's touch on some of your other products here. And you have teamed with our good friend, Gene Munster of Blue Ventures. And you've created an ETF, LOUP, the Loop Frontier Tech ETF. So just give us a quick synopsis of that ETF.
Yeah, the Loop ETF, we worked with Gene and his team for quite a long time building this ETF. And I think what we looked at within the space is that there's a lot of interest in thematic tech investing. I think themes are really becoming the new sectors, whereas it used to be, hey, I invest in consumer staples or I'm liking utilities now. Thematic investing is really drilling down and getting more granular and more specific. And we're finding that investors like investing that way more so than using the old sectors. And so with Gene and his team, what we're bringing to the table is really Gene. Gene is a super well-known in the technology space for his coverage of Apple and Amazon, but his firm, Loop, is a venture capital firm that is identifying kind of these cutting-edge technology companies to invest in. And I think when we look at our ETF, we're bringing very unique exposure to the market because we're utilizing Gene's expertise in the frontier technology space to identify companies that are bringing really innovative technologies to the market and selecting those stocks and packaging them in the ETF wrapper. And there really aren't any other ETFs that leverage someone with the expertise like Gene. And so I think that's what really separates this ETF from the other technology ETFs out there today.
Okay. And also, before we let you go, you guys cover both sides of the market here. You've created some ETFs here to perhaps if there is ever a downturn in the market, you guys have some products that people could use to perhaps, get some exposure to the downside here. Talk to us about those ETFs and their makeup and how investors can use it to their benefit.
Yeah, absolutely. These are the products that we're really excited about. And I mentioned Bruce Bond and John Southard, two ETF legends. The reason why they're back in the space is because these types of payoffs have never been done before in the ETF wrapper. And so I'm sure a lot of people today are very concerned about investing in the market. Is it going up? Is it going down? I don't know. Is it going to be up 20% next year? Is it going to be down 20%? It could be either. We are not sure. But what we found is that a lot of people are looking to be able to participate in some of the market upside, but with a level of true downside protection. And so, Joel, a lot of people invest in fixed indexed annuities, insurance products, and bank products that provide similar exposure. But when you put those payoffs in an ETF wrapper, it mitigates significantly. It eliminates a lot of fees. It lowers the overall cost. You have liquidity that you can get in and out. And so what we think is with retirees, with a lot of people looking to maybe de-risk some of their portfolios, these ETFs allow you to participate in the S&P 500 with levels of true downside protection of 9, 15, or 30% over the course of 1 year to the S&P 500. And that's something that we think is very unique in the market. And it's really the only ETF to provide true downside protection.
We've been on the line with Graham Day. He's Vice President, Product Development and Research at Innovator ETFs, joining us here on Benzinga's Pre-Market Prep. Graham, thanks a lot, and we'll get you back on again soon.
All right. Thanks a lot, guys.
All right. Nice spike in the S&P's up here to 29.43 and a quarter. Dennis, why are you buying?
That was all the imbalances. So they all just went up huge. And on that move, the S&P spiked up like 30, the SPY spiked 30 cents. So they all went, they were slight to buy. They just went up like enormously to the buy side. And that's why you saw the big spike. So we're looking at like Bank of America, 4 million to buy, JP Morgan, 2 million to buy, Nike, 1 million to buy. There's just a ton of buy balances here. I don't know if these are going to stay, but the next round didn't pair off. They actually got bigger. And that's why you saw the big spike in the S&P as ARBs are saying, hey, these stocks might open a hell of a lot higher. We don't know this yet for sure. Again, it's early. These can change. But as of right now, it's looking like these stocks are going to open a lot higher. Okay. So I'll let you know if it changes.
Okay. All right. You did see the nice spike. You are here on that. But and Dennis, also just word caution. I mean, someone come in at 9.29 and 29.
Oh, yeah, they could just take
take them out.
They could just change. So definitely, take it with a grain of salt. It's these things. It's not like a normal day. These things might change very quickly and go the other way. So, but right now, there's just huge buy balances here. Like right now, I think the SPs would open way higher than they currently are. But if these stay. But I think you're going to have some institutions look at their chops right now saying, okay, I got some liquidity to get out on. I'll take the other side of these trades. Because basically what the imbalances are, it's advertising out there that we have huge buyers in the market here today. Do you want to take the other side of these trades? And most traders, and like I do it myself as well, I see these and I automatically fade. So, if I'm going to see Bank of America's going to open way up, I will fade into that trade. So, usually the play is to fade into the stocks if they open too high. So if you get like a crazy Bank of America open like 31.70 or something right now, it's trading 31.33 right now, I would sell short that open. So that's the way I would play it. So it all depends on, what happens. But typically on these days, when stocks open a little bit too high, they're usually fades. So, but then, obviously I hedge it usually with the SPY or something like that as well. But right now, they're looking a lot higher. That's why the SPY got high.
Okay, and Dennis also likes, we'll take a look. I mean, according to where it's trading in fair value, and then also if it's like coming up on a big whole number, like AT&T right there now trading at 34.01, trying to take out that size.
It could take it out. Yeah. It could take out that size if it's big enough. So we'll see if it can push through it. I still think 34 is going to be the bogey for it. It's try here the pre-market. Right now, AT&T is a 3 million share, 2.7 million to buy. So that easily takes out the 380,000 shares we have there. We're talking about, something that's 9 times bigger. So it can take that out. It's a matter of whether there's institutions that come in and pair these off a lot lower. Like, I mean, someone like an Abbott Labs right now has 484,000 shares to buy. Like, the stock would probably open up over 70 if that holds. I don't think that's going to hold. I think they're going to offset. I don't think Abbott Labs is going to open over 70, but it's a consideration here. So just keep in mind, that's why the S&Ps are starting to show life here. And we're up about 40 cents since we got the original buy balances at 8:30.
Jar Jar wants to get your thoughts on GTXI. He was just curious.
We just talked it, and it's trading up over 2. So I said originally on the show, these things tend to go back down. It spiked a little bit. Stifel came out with a quick note there, and I just talked about it in the chat, and they said they got $2 a share in cash. So I think that's why you saw the stock when it was $1.50 go all the way up to 2. I actually did trade a little bit in there. I took a little bit of that move from like $1.55 up to almost the $2 area. It's now above that. So Lobster or chat say the book value is $1.67. So there looks like there's some residual value here. So whether that cash is going to be given out or what they're going to do with that now if the trial doesn't work, market's speculating that, hey, there is something here. 23.29 obviously off the table, but I think it might overshot down to $1.50 considering what Stifel is saying. So Stifel saying it might be worth $2 a share, which when it was $1.50 was a deal. Now it's $2.23, so I don't know what to say.
Michael, we really don't talk about Brick A because it's a couple $100,000 stock. I just will say Brick B is trading up 82 cents only on a couple thousand shares, and just in relation to fair value, that's trading up nearly 0.4%, where the S&Ps are trading up a little bit, over just a little over 1%. So it's due to open quite a bit over fair value here, but
608,000 to buy.
That's a lot.
So it's huge. It's huge for Burke. All these are huge. So like I said, it's a matter of whether they get paired off at lower prices or not. So it could be one institution come in and say, you got them, 600,000 shares, sell to you at 222. That's where it's going to open then. So we don't know where they're going to pair off, what price it is going to pair off. There is going to be other institutions that will pair off. Everything pairs off at a certain price. It's just a matter of whether it's a hell of a lot higher or not. So right now, the S&Ps have spiked 4 points, all due to these imbalances. There'll be media saying other reasons. It's not. I tell you, I promise you, I can see it. At 8:30, we started to lift. When they all went huge, it immediately lifted. So the algorithms are reading it and saying, hey, these stocks are open a lot higher. I'll buy SPY. So I bought some too. I mean, I bought some of the original buy balances there when we were only up 20 cents. I was like, well, market looks like it wants to open higher. I'm still holding those. So, because it wants to look like it wants to go higher here yet. Now, if they all flip to sell, you'll see that premium come out in a hurry on the S&P. So you really got to watch them. I'm getting the live feeds disseminated right into my system here from the floor. So I'm pretty quick. It's just a matter of, if they flip to sell, how quickly that premium come back out.
Real quick, we'll mention Tilray, and the only thing I can mention about Tilray is that extremely volatile stock here. Had that crazy day when it went to 300. I was correct. It had an inside day yesterday. So I think for longs here, what you're hoping is that, you can hold above that 2-day low of 150-140, because after that, there's another 20-point drop to 132. And I'm sure a lot of people would like to see that close at 176.35. I don't think we have, 244 yesterday's high. I think the best thing for bulls here is to get a little bit of a digestion period, a couple of inside days, a little bit of consolidation. You have to be aware on any kind of a rally here, whether it's 190, 200, 210, 220, they're going to be sellers here because people are stuck on that 300 print. Volume tapered off a little bit yesterday. So you got to think about where the buyer's going to come from now to take this stock back up to $300. Tim Free wanted to ask about VKTX. Had that big bump earlier in the week, but has been given some back. It's trading down 47 cents. I mean, I don't think you're really in a lot of trouble. I don't know about trouble, but once you take out 1806, a lot of people are going to be thinking about that gap down, and that gap takes it down all the way to 1087. So people have been using that good news that came out on Tuesday to sell the stock, step down buyers from 24 even to 2216 to 2085. And it looks like that 2085 could be resistance today as well.
Well, and you know what else on a stock like Viking? It did a secondary. It just priced at 1850.
Oh, it did?
So
Oh,
it's
it
not
did?
surprising
Okay.
at 1850. One thing to consider, and I always consider this, when you're buying stocks, smaller biotech stocks, they have a good positive result. A lot of times in the next couple of days, they do a secondary because they need to raise cash to continue funding the trials, the continued trials. So you see that a lot happen where it overshoots. Then they do a secondary at a significantly lower price. It often is a buying opportunity. I'm not saying this is in this case, but 1850 can sometimes act like a floor. So especially on the ones, because they're doing it for good reasons often. They're doing it because the results worked out. We need more money to continue funding the next trial or, continuing production in a best case that actually gets approved. So you often see a secondary come out a couple days after a positive trial result, and that is often the buying opportunity. So there could be a buying opportunity here at 1850. If it started taking out, I would just say, you still have to stop out on anything. The low of the move's been 1806. I wouldn't want to see it breach that, because then I'd be concerned that something else is going on. But I'm not surprised as more it's trade down to that offering price at 1850. You often see those prices act like a magnet.
Okay. All right. 857 here. S&P's banging up against the high of the pre-market session. That's 29.4550. That's your only number that you have here on the upside. Important to stay green on the session. 29.3950. That was your all-time closing high. Your pre-market low is right in that area as well at 29.37.50. Dennis, any other comments or any other things on your radar today?
I'll just say it looks like it's going to be a very volatile open. So if stocks open too high, I will fade them. If something changes, they open too low, I buy them too. As of right now, they look like they might open too high. So I think it could be a good opportunity. If you're looking to ring the register in something, you might get a really good price at the open here, at least right now when we look at it at 857. But it's early here yet, so lots of things can happen. No, I don't really have much else. This is
Spencer,
just remember.
I got a stock. It looks like it's breaking out this morning. ADT. Amazon announced a bunch of new stuff yesterday, and in one of their new Alexa products, apparently you can sync it with ADT to send security alerts to dispatchers. So ADT is kind of breaking out. That's the only headline I've got.
Goldman had positive commentary on it last night too.
Oh, okay.
So Goldman covers it. They already had a buy on it, but they reiterated their buy. I think the price target, I'm trying to go find it. Credit Suisse raised their price target too. So Credit Suisse went up to 15. I believe Goldman's up at 18 or 19 bucks. So you've got positive commentary coming out from two analysts, Credit Suisse and Goldman Sachs here this morning. So I think that's a little bit of the catalyst.
Not a lot of price information on this one. Is it IPO'd back in January of this year? It is trading at the highs of the pre-market session, which is 970. And we've spiked up in this area two other times. August 28th, you hit 960. And then you had another 960 top on July 18th. You are trading above that. So opening into resistance, but if you could hold, greener skies ahead, really not much resistance. You had a bad down month in March of this year. The high for March was 11 and a quarter. The previous month closed 1056, but see if it could get into double digits today. All right, Spencer, you want to wrap things up?
Well, one more before we go.
Okay.
We didn't talk about Texas Instruments today, TXN.
Let's do it.
They had a buyback. They announced a buyback last night and a dividend raise from 62 to 77 cents and a $12 billion buyback.
I mean, why doesn't Micron do this? Like, Micron did a buyback. Let's give us a dividend too. Like, Micron, get your act together over there. Get us a dividend and get some more love. This zero dividends killing us. Anyways, because even if the earnings are cyclical, are they going to start not making money? Maybe they're concerned they're going to go negative. But the earnings have done that obviously in the past. But I mean, they're so good right now. I just can't see them starting to lose money. But Texas Instruments getting a lift on this. Big buyback. The stock's been out of favor. That's the only thing I would say going against it right now is a lot of the chips have been out of favor. And the stock's had a rough month, although coming on the comeback trail last few days. We
have backed off the pre-market high of the calculator maker. Take Texas Instruments here. Pre-market high 111.49. You've backed off a little bit, 110.48. So if you're looking for a target on the upside, there's your pre-market high, 111.49. And when they look at these pre-market levels, you like to see if they have a daily level that coincides.
There goes your imbalances.
What happened?
They just went down big time.
They did.
So, okay. Yeah, you can see the S&P's falling too.
Yep.
So the imbalance is just a lot of them just went negative. So they got paired off. So still some buys. Chevron 1.6 million or 1 million, Exxon 1.6 million, but right now a lot of them just went negative. Bank of America went from like 2 million to buy to 400,000 to sell. So you can see how volatile these things are. So just be careful when you're trading out there. There's a lot of information happening that you might not know about, and these imbalances is one thing here that is very volatile here this morning.
What time will you put in those on a day like this? Will you wait till like the last second, the last minute?
I put them in just in case. I put in orders like if you want to open way up. So I put OPG. So let's say ExxonMobil. I'll set you up a trade. ExxonMobil right now is 1.6 million to buy. Means probably if it was to open right now, it's probably going to open like at $86. I would throw up maybe like you got some considerations here. You have oil trading up. So Exxon should trade up because oil is trading up. How much should Exxon? Well, ExxonMobil's beta is a lot less than USO. So, if USO is up 1%, ExxonMobil's probably should be up 0.3, 0.4%. It's probably fairly valued here right now at 85.14. If it's to open up at like 85.75 or $86, I would probably short it. So what I would do is say, I'm going to set up a trade, this hypothetical situation. I'll throw out an 85.75 OPG to sell short. If it opens up above at 85.75 or above it, I will get short the stock. If it doesn't open above it, the order will cancel. So all these orders just go out there in case something opens too high or too low. If they don't open too high or too low, then I don't get executed and, there's no trade. But all I throw out is like on the big buy balances, I'll throw them usually out to sell them short. Big sell balance, I'll throw them out to buy because if they open up too low, usually there's an arbitrage opportunity. If they open up too high, there's usually an arbitrage opportunity. So that's all I'm trying to take advantage of is the relative efficiency between the S&Ps and the individual stocks on a day like this. It's statistical arbitrage.
Yep.
That's actually almost straight up arbitrage if you had them all, but I'll just say it's stat arb a little bit because I'm not doing them all. So I'm not doing the entire basket of stocks versus I'm not doing all 500. So I'm not doing the straight up arb. I'm just taking the major components, but still arbitrage.
Yeah,
so
getting done.
That's what
and as we've mentioned on the show several times, there's 11 stocks in the S&P 500 to make up over 20% of the index. And
you get those 11 stocks on, you're going to have a high correlation with the overall market.
Exactly. I just want to mention one stock here that had a great day yesterday. It was a pick on our show back when Sean Udall was on. There was Acadia Pharmaceuticals had some good drug news yesterday. Big update yesterday. You are getting some follow through. You're trading firmly in the $20 handle. Your pre-market high is $20.50, but you haven't backed off much. You're at $20.40 as we speak. So trying to get through that, continue opening print will be important. Nothing I can find on the monthly charts until $22.56. That was your high back in April. This is really the fourth day of the move. The first day was small. The second day was bigger. Obviously, the big move yesterday. If you're trying to protect profits on this big move here, you wouldn't want to, after being up $1.30 here, you wouldn't want to see it unchanged on the session. 1911 was the close. So, okay, Spencer. The last time.
All right, that's okay. Always nice to grab an extra 2 tickers in there, but that is going to do it for us today. So if you guys missed any part of our show, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or just watch us on youtube.com/Benzinga TV. You can see our charts and our pretty faces there. Thanks to all of you who joined us in both of our chat rooms today, both on YouTube and premarket.benzinga.com. Thanks to our guest, Graham Day from Innovator ETFs. Hope you guys have a good weekend, and we'll see you on Monday.